What's up, guys? Happy Monday. It's in the books. Tesla went rallying today, and it looked pretty good. Caught quite a few trades in the live trading room on the Discord for the premium section. Caught some really nice moves. Hopefully you caught them too if you're a premium member. If you're not, check out the links in the description below. We got links to join the free members in the Raw Stocks Trading Discord. Also a link to upgrade. Currently we got a 50% off premium upgrade, making that first month only $12.50. Also comes with a 7-day free trial. So basically you get 37 days for $12.50 to try us out. See if you like the options call outs. And if not, again, free to join just the regular Discord and hang out with the other members that are in the trading rooms. Let's go ahead and dive into the chart. We talked about the previous day high, that if we closed a candle above that, that was a nice bullish look. And you can see today on the daily candle, we had a close above the previous day high. Now we're back above the 20 period moving average on the daily chart as well. So nice look for Tesla. We got RSI starting to push up, right? It's pointed up. It's above the moving average on the RSI. It's pushing 50 now. So that's a good look. We could definitely see price rally above 184, potentially all the way to this next fib extension of 190.54. Maybe the consequent encroachment of this fair value gap at 190.160. That's a daily fair value gap, right? And we have the possibility that the 20 period is going to hold us as support as we close this this bearish daily fair value gap here with a candle close above 175.40. That would close that. It would invert it. It would likely act as support. We might draw back down into it, right? 20 period correlates with that, as we would potentially see that 20 period curl back up and then hold the support as it drove us again up into this, deeper into this fair value gap above. Now, if price was to just react inside this fair value gap and reject, then we'd be looking to come back down, test the previous low into the order block below, all the way down to 153. Now, what I kind of think is going to happen is that we're going to start to see this push up into earnings, and then we have earnings that'll come out on the 23rd, right? That could support, maybe a little bit of a move up, pop back down. I'll draw it out here for you, right? Maybe we pop back up, come back, test support, rally up, right? And then on earnings, we see us dump back down in, a little bit deeper into that order block. That definitely wouldn't be out of the question. We've seen Tesla drop on earnings recently. And so we'll be watching that as we get closer to earnings. But right now, things are starting to look like it's the bull case scenario where we're going to see price go up a little bit deeper. We saw that fail to deliver into the order block where we first the fair value gap, where we first kind of popped up, tried to test that fair value gap, immediately got slapped back down. Now are we going to go deeper into that fair value gap? And that's entirely likely. We then drop down into the 1 hour chart. On the 1 hour chart, we got a bullish look too. We're above the 20 period. We're above the 50 on RSI. RSI is flattening out a little bit as that 20 period is catching back up. We're inside that daily fair value gap, outside of that order block that saw that equal low. And then, basically what we're wanting to see in the bull case scenario is that 20 period hold us on the 1 hour chart and then start to drive us up. We saw today's action. Coming off Friday, we saw that pump up. We saw that early, pre-market fade here. And then, right out of the gate, we catch a nice bullish candle. And then on the 1 hour chart, we basically just kind of consolidate into close today. And so we will, again, be watching to see if this 20 period can hold and then drive us up. We've spent a lot of time kind of testing this fair value gap here, this daily one. And so, I do expect that we are going to push up, close that fair value gap, invert it, and then start to see us push towards the above bearish fair value gap and draw on liquidity. We know liquidity is going to rest inside of this large daily fair value gap. And whether or not we trade all the way up to 200 and take that out, or maybe we just draw on liquidity, recycle back down, eventually come up to take it out, we will be looking for reactions. And you can break this large fair value gap into quarters, or, the white line here is the consequent encroachment, which is the 50% of that fair value gap. I would expect a reaction there as well. I don't think we're going to push up to it and reject again because we already did that. So I do think when we get up there, we're going to see it push up, maybe into the 25%, maybe the 50%, maybe up into the 75%, and then all the way to the full closure of that fair value gap. We'll just have to wait and see. I like that 50%, the consequent encroachment, as an area to target. We'll drop down into the 15-minute chart. 15-minute chart, we start to see our London range here. You can see we faded it, right? And then we pop back up. Took a trade in here. We took a short at one point for a small gain. And then we ended up taking a couple long positions. 3 out of 5 of the trades hit. One of them got stopped for break even. One of them took a small loss of 150, but we made it up on some following trades, and I'll show you when we pop down into the lower time frame. But on the 15-minute chart again, we're just below the 20 period. You see, we didn't really top out here on RSI, but we just came back down again, looking for price to cycle back up, get back above that 20 period, get the RSI pointing up again, right? Because I think we've drawn enough on this liquidity that if we're not going to drop, that we're going to end up taking it out and inverting it. Then the last thing I want to look at is the 1-minute chart. The 1-minute chart is where we took our trades today. It's typically where I take most of our trades. So we'll take a look at the silver bullet, right? So we get our 9:30 open right here. We see price push up, pushes up above the London range over here. Let me see if I can get that indicator turned on for us. Okay, there we got our ranges. So we got our London range, right? We got New York, we got our silver bullet. So again, looking here, as we popped up into open, we end up running out the liquidity on the London range. This is that level we were talking about that we wanted to close above. That's a previous day high. So we busted through it. Then we faded back down. We had two different levels here that were two different previous daily candle levels. And so you can see we broke out and we came back and we tested it and we found support. So let's go just dive into the trades that we took. Get on the 1-minute chart right here. We saw that silver bullet time macro where we ran out liquidity that we were looking at, right? And then what we can see is we see that the stops get ran out right here, and then we come back down. We set a bearish fair value gap. Okay, we pop back into it, took the short there, wrote it down just a little bit. We get another bearish fair value gap, right? Write it down to the levels. I don't know the exact area I closed at, but took a short there, right? And then we pop down, and then what we see is we see an inverted fair value gap, a bearish fair value gap that gets inverted. Okay, we pop back up into another fair value gap. So there we're stuck between two. At this point, this one's red. We come back down, right? And we bust up through it. You can see here, I had a trade right there where we looked to take the entry, wrote it up, didn't get stopped, right? Close that trade, come back down, end up entering another long, ended up riding that long out pretty decently. But you can use those fair value gaps, right? This one was a bearish fair value gap. It ends up inverting, right? And then we draw back down into it. There's another bullish fair value gap here. So not only do we have the inverted, but we also have the bullish. So that's like double, confirmation. And then what happens? We end up taking that ride up, right? We get another bullish fair value gap, a couple of them. We trade down into it. We end up rallying up higher. And then you can see here again, we tried to go, traders tried to go short here, runs out the stops, right? And then fades. Same thing. We tried to take a short. I think this is the one I might have got stopped out on out of the gate and then re-entered and ended up being successful with it. I think I tried to take it here as we ran out the stops, right? And then I entered again back up here. But we get another inverted fair value gap. We get another bearish fair value gap, right? We pop back up to it. You take the short entry. You run it back down to some kind of liquidity target. I took these lows. You also got this fair value gap. You can see both of them hit, whether you took the early exit here in this candle or you let it ride just a little bit further down to that fair value gap. That bullish fair value gap ends up holding, and you can see it ends up holding all the way through. Ended up taking another long position and was able to, I didn't get a perfect exit, but you can see we just barely missed the target. The target was previous high. I ended up letting that run out a little bit, and I think I sold it down here a little bit. I was busy doing some other things at work. and so was unable to close the trade successfully at the very top, but still got a nice exit on that one as well. And again, entry on that, you got an inverted fair value gap right here, right? And I don't have it marked off, but if you look at right there, we get a fair value gap inversion as we had a bearish fair value gap. We come trade back up through it, okay? As this bullish fair value gap holds, take your entry, right? And then set your stop loss and your take profit. You can see we tried to come back down before we got to the profit, but we didn't close below the stop loss low. And so trades still continued to be executed, and then ended up allowing it to run up and take the exit appropriately. So just, that's the way you use some of those smart money concepts with the fair value gaps, the inverted fair value gaps, right? Doesn't take much. You can see we just basically are tracking gaps and certain time periods, where here in the silver bullet, right? That's important. We know that there's a lot of volume and a lot of activity during that time. And then other than that, it's just fair value gap. So hopefully this has been helpful. Again, if you guys aren't part of the Raw Stocks Trading Discord, check out the links in the description below. Again, free to join. Premium's cheap. Calling out trades every single day, and we're doing pretty well with them as well. So we'll see you guys on the next trading session. Good luck on your trading, and you guys take care.